This is Daniel, and you're watching Unrivaled Investing. Another day, another exciting SPAC merging with a company that is looking to revolutionize their industry. The question is, does this company have the potential to do it? Today we're looking at Trin, which is merging with Desktop Metal, and we'll get into several key points in this video. Let's see. So first, what is Trin Acquisition, which is the SPAC? What is Desktop Metal? That's going to be the real basis of this video. Most of my focus is on Desktop Metal. What's the opportunity for Desktop Metal for shareholders? And keep in mind, the current ticker, before the merger is completed, the current ticker for Trin Acquisition Corp is TRNE. So this is how it's publicly traded. Does this have 10x potential? That's the lens I view all potential investments, because I want to make sure, hey, there's long-term huge runway ahead for shareholders to benefit from. What's their business model? Do they have an unrivaled value proposition? I'll get into that a little bit later as well. And what does sort of the investor journey look like from here? What's sort of the valuation thoughts from here? But before digging in, if you like to learn about potential multi-baggers, companies that could potentially go up hundreds or even thousands of percent, hit that subscribe button. If you're already a subscriber, hit that like button. And if you want to know what I'm personally buying and selling in any given month, and also have exclusive content during the month, go to unrivaledinvesting.com. The reality is, finding just one multi-bagger can change your personal life journey. So if you want, follow my journey to find these potential multi-baggers as I try to buy them for my personal portfolio. If you have any stocks or ideas, I love getting the comments, questions, below in the video, saying like, hey, this is a company I want you to look at. Please leave a note below, because actually this SPAC itself was because of not only some of my YouTube subscribers, but some of my subscribers at unrivaledinvesting.com that are like, hey, I own this. I'd love to know, what your thoughts are, Daniel. So I have several requests, and that's why I'm making this video. So this is all the loyal YouTube subscribers, all the loyal Unrivaled Investing Journey subscribers. This goes out to you. So what is Trin Acquisition, ticker TRNE? So it starts with a $300 million SPAC. I've done a couple of videos on SPACs. Those are special acquisition companies or corporations where they're just a pile of cash. They look for a bunch of deals. They try to find one company that they can take that cash and merge with, or buy a chunk of the company, effectively bringing this private company public. And then usually when you have a SPAC, you also want to bring on some additional capital to make the deal close, to make it interesting. And so in this case, you have a private investment placement in the equity of an additional. So you have the $300 million from the SPAC, then another $275 million. It does have some really interesting investors with Chamath Palihapitiya. I just did a video about Opendoor. That's IPOB, which is his SPAC. So he's investing through. So this isn't like he's not investing through the SPAC, which is Trin Acquisition. He's investing through the private placement at $10 a share. JB Straubel's note is interesting because he used to be, one of the top dogs at Tesla, I think the chief technology officer. So that's a big deal. If you're trying to size out, figure out, does this company have the potential, you'd want to make sure you're getting that stamp of approval. Now, of course, plenty of companies have fooled investors before. If you look at Theranos, you had Larry Ellison as one of the major investors, and like Theranos ultimately was a huge scam. I don't think that's the case with Desktop Metal. I'm not saying that at all, but I'm just saying, like, you should never just look at some great investors or investors as sort of like, hey, this is the rubber stamp that I should invest as well. You have to use your own judgment. That's a theme throughout life. Be rational, use your own judgment. And then Baron Capital, I'm pretty sure this is the same long-term shareholder in Tesla. So you do have this common theme of all these pipe investors, or at least several of these, were also Tesla shareholders. And so they understand making venture bets in sort of industries that could change the world. And in this case, Desktop Metal, I really think it could potentially change the industrial manufacturing world. It's a trend that I'm excited to follow, and we'll get into more into why in a minute. So you can see the terms of the deal. They're bringing in about $600 million, and then almost all of it's going to the balance sheet, with the exception of about $50 million worth of fees. You can see that the existing shareholders, about 74%, rolling their equity, and the rest is coming from the SPAC and the private equity, or the private investment placement from Chamath, JB Straubel, Baron Capital. Those are just a few of the investors. So you can see what it's sort of penciling out at. They valued at, given that the SPAC is priced at $10 a share, which is the cash value, and the share price of trades obviously can trade above or below, but generally trades above. So the price above $10 is effectively shareholders saying, hey, we think this deal warrants X% premium. So if it's at $12, they're saying we think it warrants a 20% premium to what the SPAC got and what Chamath and company got in terms of doing this deal. And you can see this deal is currently valued for around $2 billion. That's what you see over here. So what is Desktop Metal? And that's really the focus of this video, because the reality is by the end of this year, if the deal closes, you won't hear of Trin Acquisition again. You'll just be focused on Desktop Metal. And that's as a shareholder, that's where your destiny lies, is what happens to Desktop Metal. And they're looking to revolutionize industrial manufacturing. And the reality is they're looking to do that through either additive manufacturing, aka 3D printing. And the reason why 3D printing is so interesting is if you look through traditional, industrial manufacturing, you either have, some sort of castings or some sort of machining, and they both have severe limitations. They have some really interesting diagrams here to sort of look at. Like, one is an example of if you're looking to make a really complex item, and here's, for example, a 100-part antenna. You have to machine all these little tiny things, 100 different pieces, and then you have to assemble this together. But if you could have something where you can 3D print, so additive printing, layering it up over time, you can have just one part that seamlessly works together without the assembly phase. So you're changing your supply chain dramatically from going to make all these small parts, then ship it to a country that's going to assemble it, then ship it again. So you're completely disrupting things. And not only that, there's a 95% weight reduction going from this 100-part antenna to just one part. And so I think, this is something that we as a civilization, it would be a great thing to go to 3D printing, where if you're able to get these efficiencies where, hey, you can build whatever you need to on premise, and you don't have to worry about, you get the supplies from here, it's shipped to there, where they make these components that are then shipped to there, which oh, and by the way, you're paying a tariff, you have tariffs, or some sort of tax, value added tax each stop along the way. And then, oh yeah, we have the assembly, and then we ship it over here for testing, and then it finally gets to the end, consumer, because the distributors. Also, it's also much cleaner for the environment if you don't have to ship a good and all these components, 5 different countries. If you can just do one country, you have way lower taxes, way lower costs, and it's also a way of making your own economy that much more robust, because then you don't have to rely on, let's say, other countries that are manufacturing your goods. You can just have it, hey, we're going to be make sure we make these critical components in-house, because in country, because we have a 3D printer that can do this. Is there the potential for industrial 3D printing? And that is what Desktop Metal is looking to do. And so they talk also about, one is the cost is much lower, the time and labor, just machining or tooling and then assembling and shipping. You're by eliminating all these things, you're dramatically lowering the costs. Not only, the cost for the environment with the shipping cost, but, like the fact that you'd need all these people to assemble it. All you'd have to do is design a complex object once and say, hey, this is how this whole thing needs to work and flow through. And it's much easier to do that than have 100 smaller components. There's also the way traditional, building works, the way traditional manufacturing works, particularly industrial manufacturing, is that it's machining or casting, where you effectively take a block of metal and then you're cutting away at it, or you're using some sort of mold that you're sort of slamming it into or heat it up and pour it into, and then everything else sort of gets wasted away. Especially if you take a block and you're like chiseling away at it, you're machining away at it. There's so many disadvantages to that approach, versus if you're able to get a highly efficient 3D industrial printer, where the waste it drops by like over 95%. Then there's another aspect of cost of inventory. If you can manufacture the items you need when you need it, then you don't need to spend as much on bulking up on your inventory to hold all these things. So all those logistics providers that are holding the inventory that then ship it when you need it and then mark it up 300%, they're going out of business. So this is honestly, this is another type of revolutionary type of company. And regular viewers should know this is the type of stuff that gets me excited. I am looking for the companies that can change the world in a good way. I want win-win situations that are creating dramatic benefits for all counterparties, that could benefit from these things. I'm not looking at like tobacco companies where it's like a win-lose proposition. I want win proposition. And when I say win-lose for tobacco companies, it should be fairly obvious. You're killing your customers. Sure, the customers might like it in the short term, but long term, I'm not as interested. Same thing with casino companies. The other investors are totally welcome to do it, but for me, that's not going to fit what I'm looking for. I want a win-win value proposition, so that way, long term, your customers can be happy and win. And that's when I think about 3D printing, I'm seeing all of these things line up of like, wow, lower cost for the customer, lower cost on the environment, faster to get things produced. You don't have to spend as much on inventory. You don't have to spend as much fixing your machines that are used for the machining or the casting of making these goods because you're using a 3D printer. So, and you can build the range of stuff that you can build because you have your own, effectively, you have your own manufacturing in-house that you can change and customize. You're going to be able to create even more cool stuff, much more customization than what you've seen in the past because the barrier to creating it is going to be so much lower. We haven't even talked about the integrity of the materials yet, but we'll get to that in a second. So in short, Desktop Metal is trying to revolutionize industrial manufacturing. And you can see that it could result in much lower costs as well as much lower taxes, it's just going to change the supply chain. So is there a market for this, for all this potential? And at this point, I would say yes, there is theoretical demand because you really haven't seen it in the way that you'd expect from an explosion. And you can see on the chart on the bottom, like how it's slowly grown from a couple $100 million to $1 billion. And the growth rates have been accelerating from, single digits to 20%, annual growth. And so now it's around a 12 billion, it's a teens billion dollar valuation, teens billion dollar market that they're tapping into. And why is it such a small market at this point if I'm talking about all these potential benefits that you can get? And the reality is, up until this point, it's been too expensive to do 3D printing. It just doesn't work. It's too slow. But if you have something that's fast and can print just as fast or faster that it would take for you to do some sort of industrial manufacturing, and it's dramatically cheaper, then you start changing the economics. And so historically, what you've seen is this has been the market, this billion-dollar market has been a market for prototypes. Hey, we really want to see what this prototype would be like. And there are some companies we can reach out to, and let's see if they can make something in a couple of days and get back to us fairly quickly, because it would be really neat to have this part and let's design it. So the market is slowly growing, but it's primarily with prototypes. We haven't hit that part of the L curve where it's like, oh, now there's rapid adoption because it is lower than traditional manufacturing and it has all these benefits I just mentioned. So we haven't hit that, but if you expect that we could, then that's where you see this sort of chart where they're like, look, we're going to not only keep growing at 20% a year, the industry is not only going to keep growing at 20% a year, but the market might accelerate its growth to like 25% a year. And this will be, a $150 billion industry by the end of 2030. And I think that's really possible. It's kind of like the internet, where for several years people were like, I don't get it, connecting one point to another. Okay, you got this one company called Amazon that's selling some books. Like, what's the big deal? And it's only when you start seeing that the nodes, keep getting connected and you see this sort of exponential growth, you go, oh, wow, that's where this could lead. This could be much, much bigger. And now we're in the world of e-commerce, and it's just this behemoth and it's become apparent to everyone. So when you see something like this, you should recognize that there's a lot of assumptions that are going into it. And it's sort of following this logic of, I see the benefits, but there has to be a lot of faith that goes into it. And whenever you're dealing with faith in investing, it automatically creates sort of a wider range of outcomes. And honestly, it reminds me of this joke of the Hubble telescope, where if you change your perspective by just a few degrees, you can end up looking at a different galaxy. And that's what happens. Is like, hey, you change this by a little bit, and you're in a completely different universe practically. And so maybe by 2030, you haven't hit that part of the growth curve, and the market's only up by 5x. Or what if they're actually downplaying it, and the potential is 20x growth from 12 billion to 240 billion in the future. So either way, though, I think they're right to say it's going to be much, much bigger. And this is a trend that if Desktop Metal is tapping into, they could be riding. And so what are the implications if 3D industrial printing is successful? And the answer is it's enormous. I not only mentioned the costs already, but if you're able to manufacture things that are cheaper and lighter, then all of a sudden, like, your cars, your shipping industry, cheaper and lighter to manufacture things. Like, holy smokes, like space exploration, they put that over there. I mean, that's relevant given that they're all Tesla investors, and therefore they know about SpaceX, and they're probably SpaceX investors as well. But like, if you're able to make a space shuttle that much lighter, then based on how much fuel you have, you can go that much farther. And the same thing with any sort of transportation industry. They're talking about how if you're able to manufacture goods based on these custom designs that are sturdier, stronger, cheaper than traditional manufacturing, you're going to revolutionize, industrial automation, next generation defense capabilities, personal and commercial aviation, like where you can make, it'll be cheaper to be able to make like personal helicopters, if you know. Like, there's all sorts of crazy ideas, crazy secondary effects, like the opportunities, the secondary effects. If a 3D printing revolution occurs, the secondary effects are just mind altering. It's just mind blowing. Like, it's the same way that we everything sort of touches the internet now. Like, people get married based on people that they met from the internet. Like, if you were to say back in 1990, like, oh yeah, someday someone's gonna get married because of the internet, you'd be like, what? Like, this doesn't make any sense. But the problem is, it takes years for this to play out. You have to have When Harry Met Sally type movies come out, that go on. Harry Met Sally, that wasn't the email. It was the same actors, but different, same plot, but that was anywho. So and one of the items they talk about is how you can revolutionize green energy. Is it really possible to revolutionize green energy? Is that really the case? I mean, they talk about all these other things, and here it is. They say that with 3D printing, their manufacturing costs of solar panels can drop by half, by 50%, and that they could get 20% more efficient. Wow. Like, they're really, like, they are, if a 3D printing revolution occurs, like, the secondary effects are enormous. They also talk about how, like, shipping costs for the wind turbines, like, you send these 50-foot molds that you use to make these wind turbines, of which a lot of which you use are mostly done by hand. If you can manufacture those on premise of where you need to, it's easier to ship a printer than it is to ship a 50-foot mold that you'd use to manufacture these things. So obviously, like, you can sense my excitement about 3D printing and how this could revolutionize the world. But there's a lot of sizzle. But does Desktop Metal have any stake? Is there stake to this sizzle? And it's coming. I would say it's not quite here yet, is what I would say. As an investor, I'd want to see a little bit more. You can see their lineup of current products where they have Fiber, Studio System, Shop System. As a sort of aside, I really think they could use a little more pizzazz. They could use a little Elon Musk magic in terms of how they think of branding themselves, because, like, for their revolutionary product to be called Production System, I can't think of a more boring name. Like, at least, like, you got sexy in the Tesla cars, the S, the backwards E, the X, and the Y, or the backwards 3 and the. So I don't. They could use a little splash of magic, because right now I'm just looking at a bunch of black boxes that are going to do some cool stuff. So you could see, like the fiber system, it's scheduled to ship in volume in the fourth quarter 2020. Their current system is the Studio system, very exciting, which is the fourth quarter 2018. Shop system scheduled to ship in fourth quarter 2020. And you should, as you look at this, most of this is talking about low volume, low volume, low volume. Low volume means prototype, meaning you're only going to make a couple of these things, and it's going to take a while. It's slow. When you say high-speed mass production of metal parts designed for the factory floor, like the production system, now you're talking about the revolution. Now you're talking about things that could potentially be cheaper. But when is that going to hit? And that's going to hit in the second half of 2021. So, the stake is coming, sir. Like it's not there yet. It's sorry for the wait. That's the reality. Like there's all this sizzle, but you need to see the execution first. So far it's mostly used for prototypes and small batches. What's management have to say about their production system? And it is worth pointing out that while it's scheduled to ship in volume in the second half of 2021, it is at select customers today. So they are trying to make it work, trying to figure it out, figure out any of the hiccups in the system, the production system, to say, hey, how do we make sure we're at high speed, 3D printing by the end of 2021? So here's what they have to say about the production system. I wrote, holy smokes, because like what they're talking about is revolutionary, where they're saying, they're expected to begin shipping in the second half of 2021. It leverages our proprietary single pass jetting technology. I don't understand why that's super special, but let's assume it is. And I could do another video about it later on after I get my PhD in physics, which I have not planning on getting anytime soon. But so they have this single pass jetting technology and boasts print speeds up to 100 times those of laser power bed fusion systems, so competing 3D printing. So they're saying this new production system will be 100 times faster than the existing 3D printing systems, empowering businesses to produce up to hundreds of thousands or millions of parts annually through additive manufacturing, through this 3D system. We believe it's the fastest way to produce metal parts at scale. As a result of this massive throughput, the production system can deliver part costs competitive with conventional manufacturing processes such as casting or machining. It is also designed to enable the mass production of complex or customized designs, produces limited waste, and enables a greener supply chain through reductions in shipping and co-locating manufacturing with assembly or customer demand. We think the production system is truly the additive manufacturing revolution manufacturers have been waiting for. Okay, so this is it. They're saying the step from level 1 3D printing to level 2, where it's fast, it's equal cost to traditional systems, it's faster, it's this is it, but it's going to happen in the end of 2021. So that's pretty interesting, and they're currently rolling it out with a few select customers. Like 2021, that's going to be here in no time. So this is pretty interesting. So they're saying with no need for tooling, lower part costs, and greater manufacturing flexibility, the customer value proposition is clear and compelling. The greater manufacturing flexibility should be called out because if you have this huge, traditional manufacturing system set up with this huge cast, that's custom built, if you need to change your design, let's say you're manufacturing a bunch of cars and you have this mold or this cast, and it's like boom, 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 you're manufacturing hundreds of thousands of them. If you want to make a change in the design, that's going to take a lot of time and cost. Whereas with 3D printing, you're like, hey, I don't have this traditional machine tools and traditional cast that I have to, work with. I can let's just print out a new version. We're going to do version 2.0 using our 3D printer. So they're at select customers today. They have more than 90 reservations for this system. Costs a couple of $1 million. We'll talk more about the unit economics of this because ultimately this is multiples of their current system in terms of the price and potential value. So we'll get more into the unit economics of their production system. So it can print faster, but is the output any good relative to traditional manufacturing? And they call out that it's aerospace grade. Whenever you hear aerospace grade, that means it's super sensitive. Because if you're sending, if this is going into a jet fighter or it's going into a cargo jet or passenger jet, you want to make sure like no parts fail. And so that means it's robust, it can handle stress, it's going to last fine. And that's what they're calling out, that this, that what they're doing, the parts can be 75 times stiffer, 60 times stronger than traditional materials. It can handle temperatures that are way higher than traditional materials. I mean, this is super interesting. And they're saying it's way lighter, so stronger and lighter. So getting to the question of value proposition, and that's a lens I look at all investments. It filters out 95% of the investment universe. If it's true that their production system can deliver on this, then I would say they probably do have an unrivaled value proposition. Now, investors can wait, to see if that happens. But at this point, like if everything they say is true, that they're going to be able to rapidly produce things, customers will be able to buy this machine, then rapidly produce items that they traditionally would have had to go through this huge global supply chain, then this is an unrivaled value proposition. And unrivaled value proposition is so important because if you offer something that no one else offers, if the next best 3D printer is literally 100 times slower, then you're going to crush the market. Then Desktop Metal will dominate if everything they say is true, and they will ride that curve that we showed of like, hey, this industry is going to be $100-200 billion industry. Then they are going to crush it. If everything that they're saying is true, then they're going to crush it. And so that's super exciting because unrivaled value proposition implies that no one else offers what you have, therefore you win. And so you focus on that, you're probably going to do fine over time as long as the balance sheet can withstand it, as long as you don't run out of cash before then. So what's the actual business model look like for the production system? And they're targeting a razor blade market. You sell the initial system at a low margin, then you have a service model or a software update model or consumables model. Hey, we'll send you need to buy this very specific metal to run these machines. And hey, it's still going to be significantly cheaper and better and faster than traditional methods, but the markup, the margin that we're going to get on all the razor blade sales, so all the secondary sales past year one, is going to be much higher margin. And that's what you see in this chart. Year one, the sale is going to be 2.2 million upfront, 250,000 in consumables, where the all-in gross margin is going to be, looks like around 30%. That is pretty low. And then you could see thereafter, you get 450,000 in consumables and service, and that's 70% gross margin. And you can see how that trends, like this red line trends, where the first year starts off around 30%, but then 10 years out you're at closer to 60% gross margin. So that's definitely more interesting in terms of what sort of scale you can get. If you have a business model that stays at 30% gross margin, specifically an industrial or a manufacturing business, 30% gross margins, like you're going to have really low operating margins if that's the case. But if you turn into a consumables or service business that has 70% gross margins, then the profitability of the business obviously goes way higher. But the reality is, looking at this, is that this is a system that they're going to start selling in the second half of 2021. And just then the margins are going to be 30%, and it's going to take years before you even it's going to take, let's say, 5 years before you even get to 50% gross margin. So like it's going to take, you're going to have years of loss because at 30% gross margin, their operating costs might just be eating through. So you're not going to see this profitability for some time. You'll probably see the gross margin, step by step improve, but it's going to be years and years before the economics of this model shine through. Let's see what they're forecasting, and I'm looking at this and like everything about the story so far I'm pumped up about. But then when I start looking at the financials, like I'm like, what? Some of these things seem a little weird to me. Like, first of all, they're projecting 15 to 25 million in revenue in 2020 versus 26.4 million. So that's a drop. And they're saying like 15 million, that's like a like 20-30% drop versus what versus only, like a couple percent. So that's a big deal. Don't know how much of that's COVID related. Let's assume a good chunk of it is, and that you start getting this huge rebound in 2021 as they start rolling out their new systems. But like what I don't get is, how is it possible that you're at 42 over 40% gross margins in the first full year that you're selling your production system? Like, your first year that you're selling your production system, and keep in mind, this is multiples of your other systems, is going to be 30% gross margin. So I'm seeing this like, this doesn't make any sense to me. Um, and then within a few years, they're 54% on a consolidated basis. Like, this doesn't. I'm sure there's some banker or they have some sort of analyst that built this model and it makes sense to them. But just like a gut check, I don't get it. Like, most of your revenue is going to be coming for the first few years is going to be coming from these upfront sales, because the years afterwards, literally, like, the upfront sale is 4 to 5x whatever sales you're going to have in the years after each year. The recurring is 20% of the upfront sale. And so if they're going to have this exponential growth, which they're saying you're going to have in the years ahead, this exponential growth is going to be from selling new units. And that's the upfront cost, in which case your margins are going to be low. So to say like, oh yeah, we're going to be at 50% gross margin within a few years, gut check, this doesn't smell right. This smells like pie in the sky. I'm excited about the industry. I'm excited about what they're tapping into, and I'm really excited if they're able to deliver with production systems. These numbers strike me as BS. That's my call. Hopefully I'm wrong. Is there anything else weird about this? And then they also call out, their free cash flow, and how they're like, oh yeah, by 2023 there'll be positive free cash flow. And that it's only, they only going to take $30 million in capital expenditures. So $30 million is all it's going to take for them to build all the units they're going to need to ship out literally $1 billion in revenue. So going from nothing in revenue to $1 billion in revenue, like less than 50 million in capex. That's incredible to me. Like, the return on investment of those facilities strike me as ridiculously high. If that's the case, I think that number probably is going to be a lot higher. That would be my guess. Like, this, it only takes 10 million to jump from 500 million in revenue to 900 million, especially when most of that's going to be the sale of the units versus the consumables. Yeah, I these no I, like I the growth rates and stuff, it makes sense to me, but I'm just not so sure I buy into these forecasts. Like, this strikes me as like a banker was getting a little too jiggy with the numbers. And when I see these things, like, it makes me wonder, like, what's the real story behind the SPAC and the deal? And I think the answer is that because they're going to have 600 million in cash, with this deal. But without this deal, they would only have 100 million in cash. Is I think they needed to do this deal. I think that's the reality. Like, they needed to raise a lot of money because in 2020 they're facing a decline that's probably way worse than what they expected. They were probably expecting to start hitting this fantastic growth in 2020. They didn't hit it for whatever reasons, and so now their cash burn is much bigger than probably this. They much bigger than they probably expected, and so they're burning 80 million in 2020. That's their estimate versus 100 million in cash. Yeah, you need to raise that money because, assuming 200% growth next year, if you don't deliver it, you're out of business. So they needed to raise this cash pretty quickly, especially if they want to be selling to like the major companies of the world, to be like, oh yeah, buy our 3D printer. Like, the major companies in the world want to make sure, like, hey, if you're going to create a long-term contract of services, like, I need to know you're going to exist 10 years from now. So I think, and keep in mind, this 30 million burn is on pretty aggressive assumptions. Assuming a complete reversal of their decline, assuming there's no push out of their production system, launch date, that they're indeed going to hit it in the second half of 2021. So I look at this and I'm like, phew, there's a lot of assumptions here that I personally wouldn't feel comfortable underwriting. But do I think that this could be $1 billion revenue company someday? Absolutely. Like if their production systems deliver, yeah, like I would be willing to underwrite that if their production systems deliver. And that's why like I'm on the sidelines on this one. Super exciting, but let's watch from the sidelines. Let's make sure they deliver. So what are the thoughts on the valuation? First, my value proposition to you is that I create these templates for you to play around with. So that way you can think about like, hey, what's my upside downside? You can play around with like what's the share price potential, what do I think it could do in the future, um, what are the returns, what's what assumptions do I want to make on margins. So I mean you could play around with that yourself, based on the current price, what's my updated, so this is something I offer for you. It's a hypothetical range. Of course it could go way higher, it could go way lower. In the short term, that's animal spirits. Long term fundamentals like this is what drive the stock price. And so I have this sheet for you to play with in the bottom of this video in the description, so that way you can play around with it. The reason why I do a sort of simple summary of how it plays out is because this captures the key elements that drive, fundamental, stock price returns over time. It's valuation, it's fundamentals, and it's distributions. And those are the three elements that drive your returns. And, when you could build a complex DCF, that's thousands of cells and just huge. But the reality is, penciling this out can get you in the same range. And that's the reason why I do this sort of range of sort of saying like, well, what do I think this company looks like in the future? What does this, what could the journey for shareholders look like in the future? And so you could see using, the current price for TRIN, TRNE, TRIN acquisition of $12 a share. So it's about a 20% premium to what Chamath is paying, and the TRIN acquisition is paying for the deal. It's around a $3 billion valuation. $3 billion on a company with, 26 million in revenue. They're forecasting a decline of to 18 to 25 million. I think it was actually 15 to 25. But anywho, I penciled out, like this says 130, 2021. It should say 2020 hypothetical sales, just a minor correction. And then optimize, what's the margins here? Like this could be a lot lower, it could be a lot higher. A lot of it depends on like how successfully they're able to sell the consumables, the service, that 70%. How quickly are they able to get to those 60% gross margin level? Because if like 50% of their business is going to be, selling a consumable, and a service and support, maintenance and support, a contract at 70% margin, then yes, you could pencil out 30% optimized margins easily. But if not, then maybe 20% or maybe much lower, because keep in mind, they're going to be starting off at 30% gross margin. So 20% optimized margin in the low case might be too high. You might want to play around with this for your own assumptions. The growth rate, if they're able to hit, though, will be super duper high. And that's why I penciled, this growth rate of like, hey, if the production system is legit and you are sort of getting the stamp of approval from JB Straubel, the head of the former head of tech at Tesla, so he certainly knows something about technology. So if they're able to deliver with production systems, then I would say like, yeah, they will have a lot of revenue growth because it will have all those benefits that we talked about earlier, and you could revolutionize the industrial manufacturing world. So that's super duper exciting. And then like you are assuming this sort of incredible change in revenue, like literally somewhere between 10 and 40 times larger in the next 5 years. So that would be incredible if they're able to deliver. And once again, this all depends on the production system, and there are other systems, but the production system's so much bigger. Getting the traction, delivering on what they advertise. And you can see like a range of multiples. If they're able to deliver on this, their growth rate 5 years out will still be super high. And if their growth rate is still going to be really high, then I would expect the assumed multiple 5 years out will still be really high. So I'm slapping a higher, multiple range. And once again, that you can say like, dude, this company is going to be growing 50% a year plus in 5 years from now. Like at a minimum, I think you should be at a 50 times multiple. Like, sure, that's going to be up for you to play around with. I just did a back of the envelope, and like the reality is it's super tricky. Yeah, it's sort of like a venture bet. So much depends on what so much depends on the production system. So much depends on where the economy's at. Like, is there going to be demand for this? Are companies going to be up for saying, hey, let's rechange our whole logistics system? So there's a lot there. Um, but if you want to see what I am actually buying in any given month, go to unrivaledinvesting.com, where you can see what I buy, what I sell, what I hold, and why. And the reality is, just finding one multi-bagger can change your personal life journey. So if you want, follow my journey as I look for these multi-baggers for myself, for buying for my own personal portfolio. So that's unrivaledinvesting.com. Click on journey. And the summary, as you think about Desktop Metal, is that if you're an investor now, you're effectively a venture shareholder. You're banking on a product working in the future. And if you get great returns in the future, that's awesome. That's like great. Like you can get that. I personally don't mind sitting out and waiting for a little more execution to see, like, hey, does this product actually have product market fit? Are they delivering? And then you can reassess the valuation then. Maybe you buy after you start having product market fit. And like when I look back on this valuation range, it's honestly, it can be a lot higher, it can be a lot lower. A lot of it just depends on how things play out. Like, I prefer scenarios where I'm more comfortable with the upside downside, where I'm thinking like, hey, my downside's a lot more limited, but I still have this like 200-300% growth. Um, Here you're sort of baking in a little bit. But anywho, that's my take on Desktop Metal, Trin Acquisition, TRNE. If you want to see what I am buying, where I do find the upside downside a little more compelling, you go to unrivaledinvesting.com, click journey. And thanks so much for watching. If you enjoyed this video, hit subscribe. And if you're already a subscriber, hit that thumbs up.